This is the Financial News Network. I'm Christy Duffy. The wealthiest company in the world reporting its third quarter earnings results this Thursday morning. Exxon Mobil Corporation pumping up profit by 55% to $7.35 billion. Earnings per share came in at $1.44. Although revenue did fall short by $3 billion, street consensus estimates were for $98 billion. Discussing Exxon with me now, Jason Gammel of Macquarie Securities. Jason, how did the quarter's results compare to your expectations?
They beat my expectations. They came out at 144. I was looking for 136. The street was at 139. So, it was a beat.
Are there any further updates on the integration of XTO Energy?
Yes, on the conference call, they did talk about fairly significant progress in the integration. The fact that there has been very little attrition from the XTO employees. They mentioned they made $150 million during the quarter from the XTO operations.
Were there any losses as a result of XTO this quarter, taking into account the decline of natural gas prices?
No, they did generate $150 million in income. It did include about $50 million. It did not include a $50 million gain that they generated from some of the derivatives that came in from the transaction, but no losses anywhere now.
When can investors expect the completion of share repurchases, which hopefully will alleviate concerns about diluted profits as a result of the XTO deal?
Well, it should be an ongoing thing. They did boost the guidance for fourth quarter purchases to $5 billion. I've got about a $14 billion repurchase program built into next year. Essentially, at the pace that I have them buying in shares, they would repurchase all the XTO shares within a period of about 2 years.
XTO should benefit Exxon's long-term growth, but in the nearer term, the December 2010 gas price was down 43%. When will investors begin to see the advantages of this acquisition?
Well, it's showing up in the production volumes. I think if you look at the underperformance of Exxon stock relative to Chevron since the time the deal was announced, you'll find that the differential in performance would equate to about the full enterprise value of XTO at the time of the transaction. So I think investors who are buying Exxon stock today are essentially paying zero for XTO. And if you're buying the stock today, that means that prospectively you're getting all the benefits essentially for nothing.
What about investors who are already owners?
Well, I suppose it depends when you bought, but it's been a pretty good stock over almost any intermediate period. I suppose that if you had bought the stock the day before the XTO transaction, you've probably already taken the pain that you were going to take from the transaction. And again, the benefits did accrue in the third quarter because you generated positive incremental earnings. From a dilutive standpoint, as I mentioned, I think that the shares that were issued in the transaction will essentially be fully repurchased within a 2-year period.
CEO Rex Tillerson has commented that XOM's share price has been frustrating since the XTO acquisition in June. When can we expect to see improvement?
Well, I think you're already seeing it, actually. You're starting to get some performance makeup. We actually, about 2 weeks ago, told investors that this was now our top pick in the integrated oil sector because we do expect that you'll get some mean reversion performance now that, first of all, the XTO transaction is complete. And second of all, I think the other thing that has been an overhang on the stock that's about played out is the movement of Exxon from the Russell Value Index into the Growth Index. I think that did result in some incremental selling of the stock that should be played out by now.
What's your price target and rating on the stock?
Our price target's 85. We have an outperform rating.
All right, international volume was strong, U.S. volume a little slower. What was the impact there? On the call, it was said that no special events caused the slightly slow U.S. activity. Can you offer any color on this? What was the likely impact there?
Well, I think first of all, the U.S. in general is a mature basin that has high production declines. When I look at it, when I look at overall U.S. volumes, it was maybe, if you look at the lower volume in the U.S. that the company reported relative to what I was expecting, it's equivalent to about 0.5% of ExxonMobil's overall production volumes. So just as an issue of scale, I don't see it as being significantly negative in that regard. The other thing I would say is that this is the first quarter of the integration of a very large acquisition, and I would always expect that the standard operations of a company are going to be somewhat affected when management time is also being devoted to something like an integration.
What about the Gulf of Mexico? Any impact stemming from the moratorium?
I think it's going to be minimal. Exxon's not a big producer in the Gulf of Mexico. They don't have any deep water projects that were scheduled for startup. There probably is some minor effect from that. It wasn't quantified by the company.
And with the moratorium lifted, is Exxon implementing any new drilling in the Gulf? Any expansion there?
Well, I specifically asked them that question on the call. They have said that they had one deep water rig in operation at the time the moratorium was put into place. They were scheduled to spud the Hadrian well. They are now in the process of re-permitting that well with a new authority. And I would expect that as soon as they have approval to drill, they will start forward again.
And with increased restrictions or a closer eye on deepwater drilling in the Gulf as opposed to the amount of restrictions or watchdogs hovering over international rigs, what complications for the industry will be there?
Right, and again, Exxon was only running one rig in the deepwater Gulf at the time the moratorium was put into place, and they really have been looking to other places for their exploratory drilling. And, I think what basically happens is that, especially the legal liability that is now implied by drilling in the Gulf of Mexico, means that you probably do have a smaller number of operators that are going to be willing to take those incremental risks. And it potentially does open up incremental opportunity for those operators that have the balance sheet to be able to take that risk. Now, that may or may not affect ExxonMobil specifically, but I do think that it makes the Gulf of Mexico more and more the province of the big integrated companies and less the province of the smaller E&P companies.
And Exxon has the balance sheet to take that risk.
They certainly have the balance sheet to take the risk. Whether they decide to or not is a little more difficult to answer, just given that they haven't been heavily involved there, but they would certainly have the capability of doing so.
Okay, can you offer any guidance on the fourth quarter and 2011?
Sure. We are looking for, we're looking for a good quarter. We're expecting oil prices to average over $80 versus $76 that you saw in the third quarter, and I've got a $1.59 estimate. 2011, $6.33.
All right, thank you, Jason.
Thanks.
Jason Gammel of Macquarie. For further earnings analysis, make sure you're subscribed to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.